The 20 and 120 moving averages are overlapping as volatility tightens around session anchors. February 26th begins with the Asia session establishing its anchor range. From that base, price reaches up to test the top of the February 26th U.S. session box. The test holds briefly, then continuation fails. A lower rotation follows. The move does not stop at the nearest midline. It pushes beneath the February 25th U.S. session box. That shift opens a path into the February 23rd U.S. session containment. Interaction slows as price arrives near the 120 moving average. Bodies shorten. Wicks lengthen. The pacing changes. This is the first important behavioral switch in the sequence. Earlier candles were traveling between session boxes. Now candles begin spending time inside older memory. February 27th then places a new U.S. session anchor directly inside that overlap zone. Its range forms near the 120 MA and near the upper portion of the February 23rd U.S. box. The location matters because it compresses multiple references into one working area. For a moment, the market behaves as if it will stabilize around that anchor. Then the February 27th U.S. range is lost. Price slides again, and the lower boundary of the February 23rd U.S. box becomes the next active edge. The sequence now reads like a recycle loop. Upper tests occur at newer session boundaries. Downside flow keeps re-entering older containment. The chart is not building new space. It is reusing prior space. As March 1st arrives, the Asia session anchor forms between two references. One reference sits at the upper edge of the March 5th Asia session box. The other aligns with the February 27th midline near the 120 MA. That placement pins the anchor inside a tight corridor. Upward attempts immediately run into prior U.S. memory. Downward attempts immediately meet moving average weight. Price then expands above the February 27th U.S. box. It reaches toward the February 25th U.S. upper boundary above the 20 MA. The move stalls, and the response pulls price back into the March 1st Asia box toward its mid-range. The weekly proportional reference remains a visible constraint in the background. Price is still sitting near the 0.33 mirror location when measured from the weekly high toward the 120 mega-amperes defined low. That level is not acting alone. It is aligning with the session recycle behavior. With session anchors stacked tightly, the market begins behaving like a contained system rather than an extending one. The 120 moving average is no longer a distant reference. It has become the center of repeated interaction. Each return reduces available space. Each revisit increases friction. February 26th illustrates that friction clearly. Asia builds the initial range. Price reaches the February 26th U.S. top edge. The attempt fades, and the unwind travels through successive boxes. First, the February 25th U.S. box gives way. Next, the February 23rd U.S. box absorbs the flow. Finally, the 120 MA zone becomes the area where candles slow down and cluster. That clustering is not the same as acceptance outside containment. It is time spent inside earlier boundaries. The behavior is consistent with recycling, not relocation. February 27th reinforces this by forming its U.S. anchor inside the same corridor. The anchor is not placed above prior memory. It is placed within it. That choice of location changes what volatility can do. Instead of building a clean extension, volatility turns into short bursts. A burst appears. It gets checked quickly. Price returns to overlap. This is where the bands add clarity as states. The 20 Bollinger has already contracted and is now flattening. Flattened slope signals a reduction in expansion pressure. Meanwhile, the 4 Bollinger shows a mild outward push, reflecting short-term volatility attempts. Those attempts are visible, but they are not transferring into a new working area. They keep folding back into the same corridor. RSI behavior mirrors this session-based rhythm. During U.S. sessions, RSI sits low, pressing near 30 as downside pressure dominates. During Asia sessions, RSI oscillates closer to 50, showing balance and two-sided rotation inside the range. When the regime flips by session like this, The chart often reads as negotiation. Not because momentum disappears, but because momentum changes hands without securing new space. Now revisit March 1st with that lens. The Asia anchor forms between the March 5th Asia upper reference and the February 27th midline near the 120 MA. That anchor is placed where multiple forces overlap. The next push clears the February 27th US box, then fails at the February 25th US upper boundary above the 20 MA. That failure does not create a new outer field. It sends price back into the March 1st box toward its mid-range. This sequence keeps telling the same story in different clothing. Attempts appear at the top edges. Re-entry happens into older containment. Time keeps being spent near the overlapping averages. The current state is defined less by distance and more by repeated location around the overlap zone. The 20 MA and 120 MA are now close enough to behave like one structural cluster. When two averages compress into one area, candles can cross them easily. What matters becomes duration, not crossing. March 1st provides the most recent loop. Price pushes above the February 27th US box. It reaches up to the February 25th upper boundary above the 20 MA. Follow-through weakens, and the market drifts back into the March 1st Asia mid-range. The drift is important. Fast movement would suggest escape. Drift suggests gravity. Gravity points back to the overlap zone. Band behavior stays consistent with that gravity. The 20 Bollinger remains flat after contraction, keeping the larger volatility envelope restrained. The 4 Bollinger remains slightly wider, highlighting micro-volatility that appears and retracts. This creates a two-speed chart. Short-term volatility shows up. Higher containment keeps absorbing it. RSI continues the same session split. US sessions lean lower near 30. Asia sessions oscillate around 50. That oscillation is not resolving into a new regime yet. It is switching control by session. The weekly proportional layer adds a second restraint. Price remains near the 0.33 mirror location measured from the weekly high toward the 120 mega-amperes defined low. That level sits inside the same corridor as the session anchors and the moving average overlap. So the chart is carrying three convergences at once. Session anchor recycling. Moving average overlap. A weekly proportional reference holding location. When three constraints align, volatility can still appear, but it often arrives as pulses rather than extensions. A pulse rises into a boundary. The boundary rejects continuation. Price returns to overlap. That is what the last sequence has been processing. The market keeps testing upper edges, keeps failing to hold outside space, and keeps re-entering the same session-defined corridor where the overlapping averages continue to attract interaction.